Hi everyone, and welcome to the OctaFX live trading session. My name is Ambrose Ebuka, and we're going to analyze some pairs and look at how these currency pairs or instruments have performed in line with the last analysis that we've had. But before I go into details of this live trading session, go ahead and type your name and where you're watching me from in the chat box. So go ahead and type your name and where you're watching me from in the comment section. You can also go ahead to tell me if this is your first time, participating in an OctaFX live trading session. And also in the course of this live trading session, if you have questions or pairs that you want me to look at or pairs that you want me to analyze, you can also type the pairs in the comments and I will check those pairs out. Okay, let me quickly talk about bonuses and offers that you can get with OctaFX. So you can get 100% bonus on your deposits if you use the promo code Ambrose E100. And to apply this promo code, you scan the QR code on your screen, or you follow the link in the video description, or you can manually, type this promo code when you want to make a deposit. There's a section for promo code. You type Ambrose E100 and you can get 100% bonus to your deposits. The promo code is valid until 31st May 2023. Olawale from Lagos. Welcome, Olawale. Kelvin says it's from Nigeria. Says it's his first time here. He's pretty new in this space. Welcome, guys. Welcome. I'm pretty sure that you're going to learn some things about analysis and how to find the best possible entries or setups in the markets after this live trading session. All right, guys, we're just going to dive right in. And the first thing that we're going to do, as usual, would be to, look at the economic calendar and understand what's happening economically in the Forex market. The reason why we do this before we even analyze is because we want to pay attention to the economic events. Currencies and economies are correlated. So you want to be sure that you want to identify the strength and the weakness of a currency relative to other currencies before you actually go ahead to do your analysis. You want to know if there would be any high impact news or economic events that will be released that day, as we've just seen in the last 2 hours. The Fed Chair Powell's speech that brought about high volatility. So you want to be prepared before you actually go ahead with your analysis, right? So the first one is the Australian trade balance month over month. And if you're familiar with the trade balance, it's the difference in value of the imports and exports of Australian goods. And as a trader, if you pay attention to this export data, they can help you understand the strength of Australian goods. And the import data can also be like an indication of domestic demand. We also had the Reserve Bank of Australia rate statement and interest rate decision as well, and this has to do with the interest rate decisions made by the Reserve Bank or the board members of the Reserve Banks. And from the reports today, it seems like the Reserve Bank of Australia are very close to done with the hiking cycle, and we're already seeing further downside move in the Australian market. I'll also go ahead to show you guys that when we switch over to the charts. We've had Jerome Powell's speech or testimony about 2 hours ago, and he testified on monetary policy in the Senate hearing. Pony Creations is saying hi, welcome. So he testified on monetary policies in the Senate hearing, and he also went ahead to say that the latest economic data have come in stronger than expected, which suggests that, you know, the ultimate level of interest rate is likely to be higher than previously anticipated. So this basically means that the Fed is prepared to step up or speed up the increase in interest rates. And I'd also go ahead to show you guys how the markets have reacted to this speech by the chairman of the Federal Reserve. And the last one would be the Reserve Bank of Australian governor's speech. And the consensus of this speech, or for this speech, is not really known, and it's something I'll be looking out for as traders. So it's going to be an interesting week with a lot of high impact events. Let me just. So it's going to be an interesting week with a lot of high impact events. We still have high impact events on Wednesday, Thursday. We have NFP on Friday, and these are events that will bring about volatility to the market. So it's very important that before you make your analysis or actually place a trade, you look at what's going on, you know, fundamentally or, you know, economically in a country, right? If you want to set this impact to like medium impact, or you're seeing like low impact, medium, and you just want to set it to high impact, you can use the filter here and, you know, untick these boxes and just leave it at high impact events. Or if you want to use medium and low, that's still fine. I like to keep it at high because I'm more focused on high impact events. Okay, we're just going to go straight into the charts. I'll be starting with the dollar index. Okay, before we, you know, go ahead to analyze and look at possible outcomes or directions of the dollar index and other major currencies as well, you know, it's important that we identify the framework of our analysis, right? And framework is basically like the things that you want to look out for, or the things that you do to help you identify where you should click your buy trade or where you should click your sell trade, right? So before you start trading, you want to have a framework that would consist of your, you know, understanding of market structure. And by market structure, we're talking about key levels, right? These key levels would include, okay, I think I'm just gonna mark that out. These key levels would include your support and resistance zone, or levels. And you know, support is an area on your chart where buying pressure could kick in. Resistance is an area on your chart where selling pressure could step in. And if support is broken or resistance is broken, you know, support is going to act as new resistance, and resistance, if broken, would serve as new support for that market, right? So market structure first thing. The second thing you want to have, or you want to identify, is your entry triggers. And these entry triggers basically tell you when to buy or sell, right? So it's like multiple confluences, or should I say stipulations, you know, things that you want the market to do, or things that you want to apply to your analysis to enable you understand the future direction of the markets. And your entry triggers can be patterns, could be chart patterns, could be candlestick patterns. You can also use the moving average as your entry trigger. And I would also be applying this framework to the analysis to help you understand better on how to use your key levels, how to identify patterns and apply, you know, moving average as your entry trigger to your analysis as well. And for your exits, because obviously if you open a trade, you want to exit the trade, you want to have like areas where you want to exit the trade in profit, right? So You can use your swings. It could be swing highs, it could be swing lows. You can use ATR, which is an indicator. You can also use your stop loss and TP orders, which are automatic orders that you give to your broker, or automatic instructions that you give to your broker to execute a trade for you in profits or halt your trade from moving further into negative directions. And the last thing you want to do is actually to apply proper risk management on your trade, and this should be before you execute the trade. So you want to identify your preferred lot size. You want to use a conservative lot size. You also want to identify your risk and your reward ratio on that trade, how much you want to risk on the trade and how much you want to profit from the trade. So I'm just going to put this here. See if I can increase it a little bit, because we're going to be using this to do some analysis and identify directions of the market. I'll skip this here. Okay, I think it's pretty bold like that. Okay, so what's going on in the dollar index market? Well, first, we've identified in our previous live trading session that 104 level is a significant level which we expected the dollar index to break above. We had a little bit of a struggle here, breaking above and sustaining that break, but we're currently trading, or the dollar index is currently trading above this key level, and it has now come to serve as support, right? But as long as we're trading above it and also above the 200 period moving average, we're still bullish on the dollar. And you can see this massive move to the upside that came about, or that has happened as a result of the just concluded economic event or speech by the chairman of the Fed, Jerome Powell. And we've seen how this has brought about massive gains to the dollar index. And we're also going to look at other pairs to see how it has also affected them and how you can, capitalize on this move to make a profit for yourself as well. The 105.6 level is still in sight. This is still a yearly high. The last time we were here was in January 23rd. No, January 6th, 2023. And you can see that the market is trying to push upwards to that zone. So I'm just going to indicate that for you guys. So this level is still in sight, but keep in mind that as long as we're trading above this 200 period moving average and above the 104 key level, we're still bullish on the dollar, and we can use that to identify or to aid our analysis across other pairs that are other currencies that are paired with the US dollar. So I'm going to first look at the pound dollar GBPUSD. And remember, guys, if you have currency pairs or instruments that you want me to analyze, you can type in the comments and I'll be looking at the comment section to analyze your pairs. And questions as well. If you have questions, you can always type your questions in the comments. Let's just zoom out from this a little bit. Okay, so the most recent thing that's happened in the GBPUSD market is that we've broken below this key level, and this level has served as a support for the GBPUSD market or the pound dollar market since the start of February. right? Or we can even trace it way back to January this year. And you can see that it has served as a support, a key support level for the pound dollar market. But we've successfully broken below it. And you obviously know that's a result of the just concluded speech by the chairman of the Fed. And we're headed down to this level, right? Okay, I'm just going to drag this a little bit. Yeah, so we're headed down here. It's safe to say that we're already in the zone, because you want to use zones for areas like this. So you can still identify this as a zone that the market has retested. Let me just simply point that out for you guys. Yeah, so safe to say that we already the pound dollar market has already tested this zone that has served as major support level since January. Yeah, that's January 6th this year. So what we want to do on the pound dollar market is that we want to see how the market is going to react at this level, right? Because the last time it came down here, it pushed back up, right? And now it's back here again. So we want to pay attention to how it's going to react. Obviously, it's going to dance around a little bit, but we want to see if we can get back up to make a retest at this previously broken support and push back to the downside. Because if I go over to the left a little bit, you can see that we still have some points where liquidity can be dragged from. I'm just going to identify that for you guys as well. So we still have space to the downside on pound dollar markets, but we want to obviously see how the market reacts to this zone. We want to see if we can get like a pullback, a little pullback to the upside and another break to just come down here, or a consolidation on this, key level where you get to see some indecision candlesticks with, low momentum and then another break to the downside. And this is where you actually should start looking for buy opportunities, on the pound dollar. But currently, we're still going on sales. We're still bearish on pound dollar. I actually expect a breakout from this significant level before the end of the week to just push back to the downside a little bit. But remember that you're looking for the consolidation. You're looking for like a corrective move and then a breakout before you can identify, before you can look to identify selling opportunities to trade pound dollar to the downside, right? And obviously, if you're hopping on that trade, you want to put your stop loss just above the resistance of that corrective move, and then your first target should be here. Yeah, so that's what you want to look out for. But if we don't get that consolidation, and one second, let me just take all these things off. But if we don't get that consolidation at this point, and you see the market start to rally to the upside, then this can also be an area where you can look for sell opportunities, because that would be a retest at this previous support and then the bounce back to the downside. So these are areas that you want to pay attention to in the pound dollar market. If you had sell trades open, the best thing to do, or the appropriate thing to do, would be to adjust your stop loss into profit. Adjust your stop losses into profit. I would say just a little bit below this key level, and then you can close some profits, or just put your stop loss in profit and let the market make its move, right? But if you haven't opened any trade on pound dollar right now, what I'll tell you to do is to wait for, or just observe how the markets react in this zone, because this is a very significant level, a significant zone in the pound dollar market, and you can take your trades off what it does, right? So if we see that nice consolidation or retracement, just a minor one, then what you want to be waiting for is a breakout of that pattern to the downside, right? But if it doesn't happen like that and the pound dollar market is able to just rally up to 1.193 levels to 1.195 levels, then you want to start looking for sell opportunities here. So I hope you guys got that correctly, but if you had problems with understanding, you can always type in the comments and I will explain. Okay, Rosalind is talking about EURUSD. So let's just quickly look at EURUSD. Okay. So the EURUSD market has been trading above, I think I've already identified this support trend line, and this trend line, let me just indicate that as well for you guys. Get a bit small. Okay, so EURUSD has been bouncing off at this support trend line and actually trading above it. We've had this nice retest on the 200 period moving average and the rejection there as well. And this rejection also aligns with the retest here, right? And we've seen that drop from this minor key level. We've broken below this one as well. We've had this reaction, this massive drop down, or this massive bearish candlestick due to the speech by Jerome Powell, the chairman of the Fed. And we've seen that straight break below the trend line, the support trend line. But here's something important I want you guys to take note of in the euro dollar market, right? Two things. The first one is this trend line, this support trend line is still valid because the euro dollar market can make a pullback to that trend line, and if it fails to break above it, then you can start looking for sell opportunities. Second thing is we're currently sitting at a significant level, and this has served as a significant level. If you look towards the left, you'd see the market has made a retest here, and also made multiple retests at that same significant level, right? So I expect we're already seeing the pullback actually. Let me just zoom in further. We're already seeing the market start pulling back into and above this significant level. We're going to see some rejections here, and that's what you want to pay attention to. You want to see if we can push back to this support trend line and push back down, or you see some consolidation at this point, and then you want to trade the breakout of that consolidation to the downside, and you can take your targets here. Let me just make this line very, very straight. So that's what we want to look out for. So if you see that nice consolidation or pullback to the upside and a break below it, then that can be an indication for you to continue to sell the euro dollar market. Remember that we just looked at the dollar index and we've seen that it's sustaining its strength, it's sustaining its bullish momentum, and it's just pushing further and further to the upside. And this is also going to have an effect on major currency pairs as well, right? So can be any of these levels to the downside. So you can capitalize on this move. Oh, that's a bullish one. You can capitalize on this move and you know, use multiple targets, or maybe 3 targets. You can take one here. Let me just indicate that as well. So you can use these levels as your targets. You know, the market reacts to zones, right? So if we successfully break below this one, sustain the bearish pressure, we're coming down here. If we break below this one, we're coming down here. And this is where we're going to see the push-ups, right? This is where I believe the euro dollar market to start to push back up from. Just trace that to the right side as well. Yeah, so if you trade the breakout when it's formed and you use these targets, you want to be careful for how the market reacts here. You want to be careful on your trades that are still open when the market gets to this level, because this can be a level where the market just gets to and starts to push back up as well. So let me know if I answered your question on EURUSD. Another thing that you can also spot on EURUSD is that we're trading below the 200 period moving average. We've had this decent bounce, you know, of the moving average, and if we continue to trade below it, we're going to see the market start to create lower lows and lower highs, and that would bring about more bearish momentum for the euro dollar market. Okay, I'm going to proceed to looking at the Australian or the Aussie dollar market as well. And if you remember the economic reports from Aussie dollar this morning, you'd see that you notice that we had less reports compared to the previous one, right? We had less reports compared to the previous one, and if the actual is less than the previous or the forecast, then that can bring about that could be negative or can bring about bearish momentum for the Australian dollar market. And we've seen that happen. We've also seen how the market has reacted to the just concluded speech by Jerome Powell, and we've seen that the market has successfully broken below the minor key levels that, let me just go to the right hand side so you guys can see this clearly. So we've seen that as a result of these economic events, we've had this successful breakout from this consolidation, or you can call that like a symmetrical triangle pattern. I've seen the breakout to the downside, another breakout from here, you know, as a result of the just concluded speech by the chairman of the Fed, and the market has come to rest and has started pulling back from this minor key level as well. I'm going to zoom out and go to the right side, so that, to the left side, so that you guys can see why these are minor key levels in the Australian dollar market. Okay, so I'm pretty sure you guys can see, right? So this has served as a support level for the Aussie dollar market. This area right here has also served as one. Yeah, has also served as one. It has broken below that. So the market is currently sitting at this minor key level, and obviously you want to pay attention to what it does here, because the last time it was here, it just pulled back up, right? So this may not be a great time to just start hopping on sell trades or buy trades on Aussie dollar, except you've seen, you know, bullish momentum from candlestick, or you've seen like a consolidation and that struggle to the downside, and then a breakout to the upside, or a breakout of this consolidation. Then you can now start looking for buy opportunities on the Australian dollar and US dollar market. But I'm still bearish on this market, because, you know, the Australian dollar, the US dollar rather, has shown me some strength and is headed to the yearly high, which is at 105.6 or 106.5 rather. So I expect the market to, you know, grab some breath and then just break and continue to the downside. This is an area where I'll be more comfortable to start looking for buy opportunities on the Aussie dollar market. Yeah, 105.6. Ace is asking about XAUUSD, which is gold. All right. So in the last live trading session that we had, you know, we looked at the possibilities of gold getting up to 1850 zones, and how we're going to look for sell trade, if sell opportunities and take sell trades if we get that nice collision with the 200 period moving average. And that's exactly what happened here. And you know what happened in the gold market? It started to push back to the downside, right? So first off, this is why it's very important that you make use of your key levels. You make use of this zones, make use of the moving average indicator if you want to use that. It's just very an important indication for your entries as well. But most importantly, you need to pay attention to, you know, key levels, support and resistance zones, and, you know, breakout of patterns that can just aid your analysis and help you identify best possible areas on your charts where you can execute buy or sell trades, right? So we've seen this massive drop down, and if you pay attention, you would observe that this economic event, or this speech by the chairman of the Fed, has affected, you know, these currencies or instruments that are paired with the US dollar. And that's what happens with high impact events. You tend to see the markets react to these events and just make massive moves to either the upside or to the downside. So about gold, now we're back at this key level, right? The gold market has traded and pushed back down to this key level. And why is this a key level? So if I even go way to the left side, let's go way back. Let me take you guys back in time. So back to December. This was a level where the gold market couldn't break above in December. Tried again, couldn't break above, and struggled, couldn't break above. Broke above. I think this was due to an economic event as well, but couldn't sustain that break and pulled back down. And then it finally came to break above this level at the end of December. I think the last day, or not the last day, yeah, 30th of December, right? It was back here in February, pushed back up, came back again, pushed back up a bit, finally broke below it, broke above it, and now we're back here at this key level. So we can obviously identify why this is a key level, and what we're going to do now to just so that we're not on the wrong side of the market is we're going to see how the market reacts to this point. You know that in previous times it struggled to break above. It struggled to break below here. It broke above here, couldn't sustain, broke below here and pulled back up. So what you want to do is to observe how the market reacts to this level. If we see buy or bullish momentum candlesticks from here, then we can start looking for buy opportunities. But I still expect further moves to the downside on gold. I believe we're going to have some slow moments, or should I call them retracements on gold at this point. But there's still room to the downside, which I believe that gold would get to in the coming days. At least here. And I'll be more comfortable, very comfortable to look for buy opportunities on gold if it gets down to this point. Right? So this is the area where I want to start looking for buy opportunities on gold. This is the area where I'll be very comfortable to look for buy opportunities on gold. But until then, I expect gold to still push to the downside. It has made that nice retest at the 200 period moving average. We're trading below it. As long as we trade below it, I'm bearish on gold. But if we can break above it, then I start to look for buy opportunities. So let me know if you understand, or if this analysis was helpful with your trading decision on gold. A very interesting pair we'll be looking at is the pound yen, right? And the last time we talked about the pound yen, we looked at the possibilities of the pound yen not sustaining the break above this significant trend line, because this trend line, we can trace the trend line back to, let's go to the daily time frame. So I show you guys where this trend line starts from. So you can see that this trend line has served as a resistance trend line for the pound yen market since October 2022. And what has happened since then? Whenever it makes a retest at that, whenever it makes a retest at that trend line, what happens? It drops. It made the retest again, broke above it, and pulled back down. And at that time, this was as a result of an economic event as well. And we saw that at that same day, the pound yen pushed back down below this trend line. It happened that same day, right? And what happened? It started trading below this trend line. So what does that tell you? I mean, there was no sustained bullish momentum above that trend line. You're looking at the downside. Right? That's what you're looking for. Okay, let's go to the lower time frame. So we had this consolidation here. Just show you guys that as well. So we've had this nice consolidation here and a break below the consolidation. Now, just zoom in a little bit. Now you can see that this area served as previous support and also served as previous resistance. You can see the indication here. Served as previous resistance, came back after it was broken above, came back to serve as support. The market has pushed back up and is back to this key level, which is now going to serve as support level. And I still expect the pound yen market to just push back down a little bit, not so much, but I'm expecting a bounce off or a bounce on this 200 period moving average, right? And I think that's where it's headed. But let me just indicate this one as well. So this is going to serve as a significant support level for the pound yen market, right? And let me also identify this zone as well. Yeah. So if we get that nice collision between the candlestick and the 200 period moving average, then that could just be a higher low on the pound yen market, and we can now see or start to see the market push back upwards from there, right? But if we break below it, then we're looking for bearish opportunities. If we break below this significant support, sustain the break below, and also break below this 200 period moving average, then we're looking to trade pound yen to the downside. And for our targets, you'll be looking at these areas for targets, looking at these areas for targets, and these areas for targets as well. But we first have to break below the 200 period moving average and sustain that bearish momentum below the significant support level. If you have questions or you have currency pairs or instruments that you want me to look at, let me know in the comment section. I'm looking at the comment section to see if you guys have questions or currency pairs that you want me to analyze. So we're looking at NASDAQ, and we already had these levels mapped out. We've had this consolidation to the downside and the break above the consolidation. Now we're currently trading above the 200 period moving average. We're seeing this rejection. I'm just going to go to the lower time frame, like 2 hours, and zoom in a bit so that you guys can see why we are rejecting there. So we're seeing that the rejection is as a result of the bounce at the 200 period moving average. We're seeing that the market is the NASDAQ market is starting to push back upwards, and this can also serve as a breakout from this pattern and a retest. We have the rejection if it's sustained, and by if it's sustained, I mean if we see the next if we see this candlestick close bullish and the next candlestick show bullish momentum as well, then that could be a breakout and a retest pattern, and you can also take advantage of that in the NASDAQ market. EURUSD. We just talked about EURUSD. We just talked about EURUSD. Remember I told you guys that we're currently sitting at a significant level. We've broken below this trend line, this support trend line that has served as a strong support trend line in the past for the euro-dollar market. We've broken right below it. So if we get to see consolidations here or a pullback just into the trend line, Let me just indicate that as well for you guys. So we can see the market relax a little bit and then to break out, right? And you want to capitalize on that breakout to the downside and get your first targets here, second targets here, and third targets here. So that's what you want to look out for on the euro dollar market. So you can take your sell, you can look for sell opportunities here. Or you can also look for sell opportunities if the market pulls back to the upside and then starts to show rejection here. So you can take your sell trade. Francis is asking, I want to know the exact amount to start up the Forex trading. Well, it depends on your risk appetite. If you want to make a deposit with OctaFX, I think the minimum amount to deposit is $40 or 15,000 naira. But when you want to start trading, there's something we call risk and reward, right? I'd also show you how you can get a bonus at the end of the live trading session on your deposits. But there's what we call risk and reward, right? And this has to do with how much you want to risk on a trade and how much you want to profit from a trade. One sec. And most times, your risk and reward can be, 1% risk on a trade or two. That's the wrong one. So your risk and reward can be 1% risk on a trade or 2% risk on a trade, right? Now, you want to start with an amount that can help you utilize the advantages of risk and reward. So let's say your risk is 2% and your profit, you're going for like 4% or 1% and 3% profit, right? So if you're starting with like $100 account, you'd obviously know that this 1% risk of $100 would be $1, right? And then your 3% reward would be like $3. And 2% risk would obviously be $2. 4% reward would be $4 as well. And remember, your risk and reward is determined. It could be determined by market structure. There's some cases where your reward can be 5%, 6%, and so on. But just try to make it realistic. So the reason why I'm talking about risk and reward as something that can help with your startup capital is because with $1 on a $100 trading account, you're going to be using 0.01 lot size, which is a micro lot size, and that's just about 10 pips, right? That's just about 10 pips on a 0.01 lot size if you choose to use risk to reward. So if you're starting with an amount that is less than $100, let's say $40, and you're using a 0.01 lot size, that would just be 4 pips. And the market moves wildly up and down. It's a volatile market, has a lot of liquidity. So there are chances that the market can move 4 pips against you before it moves 100 pips in your favor, right? So that's why you want to start with a capital that can help you utilize risk to reward, so that if you're using a 1% risk, your 1% can be $10, can be, so they can help you utilize risk to reward and keep you on the safe side, regardless of how volatile the market moves. And you can also use your risk appetite as well as something that can aid your startup capital or aid your decision for startup capital. So I hope I answered your question. I've been trading with my phone. Which app can one use to analyze the market on the system? So you can use your OctaFX web terminal. There's some tools there that you can use as well to identify support and resistance zone, identify areas on your charts where you can buy or sell. You can also use TradingView as well, and this is TradingView, so you can use TradingView as well and also take advantage of the tools on here as well. Please kindly help me. I would love to participate fully in the trade, but I don't know Jack. But that's fine. I was once like you, I didn't know anything about Forex, but the good thing is you have access to educational resources for free, and this has been provided by OctaFX in this YouTube channel that you're actually watching me from. So you can click on the description. I think it's still in the description. Click on the description. Yeah, it's there. So you click on description and you click on English webinars, right? English webinars. It's going to direct you to all the English webinars, which includes, topics and detailed information on how you can understand navigating through the Forex market and how you can make the best possible and profitable trading decisions. Good day, sir. Please, can you do USD/JPY? Okay, let's look at USD/JPY. Let's go to the higher time frames. Remember, you want to start from the higher time frames because they give you a clear view of what's going on in the markets. I don't really have anything drawn on euro, on dollar yen. Okay. So we're going to start identifying from the bottom. We have another one here. We have another key level here. I'm going to pick this up a little bit. So we have another one here. So what I'm basically doing is I'm trying to identify the key levels, major or minor. I'm just trying to identify key levels first. We have another one here. Can trace this one back as well. So let's just take it back a little bit. Yep. We have this one here. Yep. Okay. So remember, we looked at the dollar index, and we've identified, or we've observed that the dollar index has gained some strength, and we're seeing where it's headed. It's still going to sustain that bullish momentum for a few days. So obviously, I'm bullish on USD/JPY, but just pay attention to the current state of the market because it's resting at a key level again. right? And I've just shown you how to identify key levels, we've mapped out these lines together. We've looked at the left-hand side and drawn these support and resistance lines. And if this market were to start pushing back down, it's also going to respect these lines as well, right? If it breaks above you without respecting it, then you just know that there's been an economic event or something that's brought about volatility or high volatility to the market, that it breaks above it wildly like that. So the USD/JPY market on the 4-hour time frame, we're seeing that it's currently sitting at a significant level. I think that's 136.8. Let me just indicate that for you as well. Right, and if you look at previous times, at least the most recent 2 times in the past, you see that whenever it got to this level, what happened? It bounced down. Got to this level again, what happened? It bounced down, right? Yes, the US dollar is bullish. It has a lot of strength. One thing that you want to look out for before buying the pound yen or the dollar yen market is a sustained break above this key level, right? So we could have a breakout and a retest to continue, or we could have a pushback or a correctional move and then the breakout of it to continue, because we already have this massive move to the upside. Market could rest a bit and then break out to the upside again, right? But just so that you're not buying trades here and then the market starts to bounce off, and then goes to the upside, you want to observe what the market does here, how the market reacts here, and also take your trades from there, right? So remember, if you see the consolidation or the pullback and a breakout of it, that can be a good place to hop on your buy trades. This area can also be a good area to hop on buy trades on the dollar yen market, right? And here as well, because then we would have that collision with the 200 period moving average, the bounce, and then you can take your buy trades to the upside. But for now, you want to just pay attention to how it reacts here, and then you can trade along with it. So let me know if I answered your question correctly on USD/JPY. Okay, I'm just going to take one more question. If I risk 2% per trade, how to open trades properly? I mean, is it okay to open 2 trades of 1% risk? Yes, you can do that. Also, remember that your risk percentage is determined by 1, market condition, and also your risk appetite. How to book profit? To use your take profit for your profit levels is an automatic order where you tell your broker you want to take profit at your preferred level, right? And you can identify that using this, key levels that we've used, to analyze trades. All these key levels, you can use that to book your profits. The swing highs and the swing lows, you can use that. And for the how to open trades and at what risk, your 1%, remember, is determined by your lot size. So if you remember the explanation I gave you, let me just quickly do that again. Where did I do that? Was it here? No. Okay. Guess I'm just going to do it again. So to calculate your risk and reward, let's say you want to risk 1% or 2%. So this 1% or 2% is relative to what you have in your trading account. So if you're trading, like, let's say $1,000, for example, then your 1% would be $10, right? And your 2% would be $20. So in order to, like, if you want to place a trade that can revolve around, or there can just be a total of $10 risk, then that is where your lot size come into play and your stop loss comes into play. So if you're using a 0.02 lot size, which is also a micro lot, all you need is 50 pips, right? You need 50 pips for that. If you're using 0.01, then 100 pips is valued at $10. So you use your lot size to adjust so that it can align with your risk appetite or your risk and reward for that trade. You can also use the OctaFX profit calculator, right? So if you go to OctaFX.com, you come down here to analysis and education, and then you want to go to profit calculator. And then in the profit calculator, all you have to do is input your values, you know, the instruments, lot size, you know, your instruments, your currency that you're trading, period in days, your lot size, the open price and close price, and then they'll go ahead to show you. You can also click if it's a sell or a buy trade, right? If it's a sell or a buy, and then you click on calculate. So they'll go ahead to tell you, oh, this is how much it's going to be in profit, or this is how much your risk is going to be as well. So you can take advantage of that if you use the Octa Trader or OctaFX MT5 or OctaFX MT4. All right, guys. It's been an amazing live trading session. Remember that you can get 100% bonus to your deposits if you use the promo code Ambrose E100, and you can apply the promo code using the QR code on your screen, or you can just manually input this promo code when you want to make your deposits. There's a section for you to type in your promo codes, and Ambrose E100 gives you 100% bonus on your deposits. The promo code is valid until 31st May. It's been an awesome live trading session, and I'll see you guys in the next one.